first of all, what's the reason behind the ramp? Because it seems that all these risks are suddenly at the forefront, but we've been talking about these risks for the last month, if not more.
Yeah, I think it's been, we're now coming from emerging markets to developed markets because in the corporate sector, clearly there are now headwinds for corporate profitability that weren't there before. We see, umpteen reports citing the effect of higher rates, higher labor costs, higher costs due to trade, and I think confidence is just taking a tip down. And in that sense, in each country, in each market, you can find an idiosyncratic cause. But this started with the global tightening of monetary policy or the repeal of post-crisis easy money. It started in emerging markets. We're kind of here now.
Yeah, but it's happened for the last 2 days, but it didn't happen 4 days ago. So again, is it what market levels? Is it technical? Is it kind of just this fear of uneasiness?
I think it means now that we're going to, all join in selling on days when things start going down and we get nervous. It's still very patchy. You get bounces, but we had a lively conversation yesterday about, for example, the reaction to the announcements in South Africa and why it was so big and what would happen next. I think when the tide's going out like this for markets generally, a bit of bad news can have much more impact.
So are you expecting more volatility in the markets, or are you expecting a downward trend?
I'm expecting a downward trend and more market volatility. And I kind of, look, I think we're done on the bull market. We're done on the economic cycle. We're not in free fall, but the best days are behind us. It's winter.
So what does it mean? Kind of like flatlining?
No, I think the big test for everything will be, I think, how deep the global economic downturn is. But one of the things that's happened is, the economic cycle is back, partly because of US fiscal policy, partly because of US trade policy, but globally there's a cycle again, and there's a cycle that saw an acceleration followed by a slowdown. We are rubbish in my profession at forecasting the depths of the slowdown, but we're slowing. Okay,
but so are there signs that you look at? So if there's a slowdown, that's one thing. If it's a recession, that's a whole other ballgame.
Well, and the comfort you get in this cycle is that there don't seem to be the same degree, particularly in developed markets, of excess in terms of excess borrowing as we had in the last crisis. We don't have an inflation spike that means central banks are going to have to tighten into a slowdown. In the sense of, if you think the Fed's over-tightened already, then they haven't got very far, so they could reverse. There's no, I can't think of a good reason why we ought to have a significant deep, why should we have a US recession or a global recession? Yeah. I can't think of a good reason why we should. But I can think of even fewer reasons why things would get better from here.